IPO is one of the most exciting buzzwords in the stock market, but do you actually understand it? Every time this word comes up, there is a curiosity, excitement, and a lot of discussion. Some people get excited, some are confused. I will try to explain what an IPO is in a very simple way. By the end of this video, I'm sure you will have a clear understanding of how IPOs work. So, let's get started. I will be covering what is an IPO, why companies go for IPO, who can invest in IPO, types of IPO, and what is oversubscription. IPO stands for Initial Public Offering. Now forget that full form. Let's say there is a company called XYZ Private Limited. Now they want to expand their business. For that, they need money. So the company asks money from venture capitalist firms or angel investors. After that investment also, if they need more money, the company goes to public asking money to expand their business. Listen carefully, any private limited company cannot take money from the public. So, after fulfilling certain guidelines, the company goes from private limited to public limited. That time, the company takes money from public to expand their business. That process is called an IPO. So, the company converts from private limited to public limited company. Next thing, why should the public like you and I give money to that company? The answer is obviously in return of shares. We will be a part of that company. Next, is there any other reason the company goes for an IPO apart from expanding their business? Yes, if the company has debt, now they want money to get rid of that debt. So the company goes for an IPO. For that, they need to list their company in the stock exchange, either BSE or NSE or in both. Okay, next and most important, who can invest money in IPO? There are three categories of people. First one, QIB, Qualified Institutional Buyers. Second one, HNI, High Net Worth Individuals. Third one, Retail Investors. QIB is meaning the institutions who have a lot of money like banks, mutual funds and insurance companies. High net worth individuals meaning if you invest more than 2 lakhs, you are called as high net worth individual. If you invest less than 2 lakhs, you are called as retail investor. Okay, now we know that 3 types of investors. The obvious question is how the IPO is divided between them and who gets how much. SEBI mandates that at least 50% of the IPO shares are reserved for QIBs, 15% for HNIs, and 35% for retail investors. Next, there are 2 types of IPO. Price band IPO, fixed price IPO. Price band IPO means the company decides the price range of its shares. Let's say 90 to 100 rupees per share. Investor bid within this range. Once all the bids are in, the company decides the final cutoff price for its shares based on bids. If you had bid at this or above this final cutoff price, you will get shares, or else your bids are rejected. Second one is fixed price IPO. There is no bidding involved here. The company sets a specific price for its shares. Let's say 100 rupees per share. Investors can apply at this price. It's simple. The thing is, the company decides which type of IPO to go for. Once the IPO opens and people start applying, another important concept comes into picture. That is oversubscription. That means when more shares are applied by investors than those are available. Okay, let's make it simple. Let's say the retail investor quota has 1 lakh shares, but the applications come for 10 lakh shares. That means the IPO is oversubscribed. So, in case of an oversubscription, shares are allotted by lottery system. So, not everyone gets shares. Why do people rush into IPOs? Many people don't apply for IPO to invest long term. They apply because of the IPO hype. They invest, get shares, then sell on listing day, make profit and exit quickly. They are called as speculators. They don't invest long term. So, where is the profit? In speculation or in long term investment? Some IPOs are really good and some IPOs list below the issue price also. It's a combination of hype and understanding the business. So IPO performance depends on the mix of hype and how strong the underlying business actually is. So that is a simple breakdown of what is an IPO, types, how it works and why there is so much excitement around it. Remember, IPOs are not good or bad by default. What really matters is understanding the business, not just following the hype. If you found this video informative, like and comment below and subscribe for more such informative videos. See you in the next one.